Welcome back. This is Walt Arnold with SVN Commercial Real Estate in Albuquerque, New Mexico. Today we're going to talk a little bit about cash-on-cash returns in commercial real estate. Well, what is a cash-on-cash return? It's a return on an investment based on the net operating cash flow divided by the initial investment amount. You own an office building and you're trying to determine how much money did I make that year? Well, what you do is you've got to get, on a cash-on-cash return, you've got to get to net operating cash flow. And how do I get there? Well, I take all the income I made that year, all the rents that I received that year, I subtract all the expenses of the property that year, and that gets me to net operating income. And then from that net operating income, I deduct any debt service that I have. So that gets me to a net operating cash flow. So your net operating cash flow, again, is income minus expenses minus debt service. And for the property, this property we're talking about, we made $20,857 that year. The initial investment was $150,000. So I take the $20,857 divided by $150,000, that gives me a return of 13.9%. Well, what is that telling me? It's telling me that the $150,000 that I put in that property is getting a return of 13.9%. If I needed to make $20,857 in a year and I had $150,000, I'd have to get a return of 13.9% to make that number. So again, commercial real estate, a great way to analyze it. It's a simple way to do it. You just look at my income minus my expenses minus my debt service. What is that number? What's that number that's left? Divide that by the initial amount that I put in the property, and that's going to give you my cash-on-cash return. You can do it annual. It's a great way to measure returns on commercial real estate. This is Walt Arnold. Thanks again for joining us. We look forward to seeing you next time.